Yes, sir. It's your boy B Hayes back with another one, guys. So the midterm elections was on yesterday, on November the 8th, guys. And as we know, guys, we have no clear answers yet. Congress still hasn't let us know who will be in control yet. That's a lot of the reason why the market is still volatile, why a lot of back and forth is going on because of the uncertainty. As we know historically, guys, by the midterm elections, we should see a bullish market during these times. So let's go ahead and take a look at it, guys. But as we know, whenever human nature stays the same and the market makers know exactly what we expecting, sometimes they'll do the opposite in the short term, and then overall it'll end up being bullish. Meaning basically, if everybody expecting bullishness, what market makers are going to do? They're going to tank the market. If everybody is tanking, is expecting the market to tank, what market makers is going to do? They're going to make the market soar. That's why we seen things that doesn't make sense, like CPI inflation data coming in hotter than expected and seeing the market soar when it should be coming down, and a lot of stuff that didn't make sense. But anyway, let's go ahead and take a look at it, guys. So as we know, stocks were the Dow slides 200 points at the open. Stocks were lower on Wednesday. The Dow fell 112 points. The S&P 500 0.3%. The Nasdaq slid 0.6%. So stocks are coming off 3 straight days of gains into the election, where Wall Street was expecting Republicans to gain ground and block any future tax and spending plans. The Dow climbed 333 points on Tuesday for its third session of gaining more than 1%, guys. So control of Congress still remains up in the air, guys. So let's go ahead and take a look at a few individual securities and what's going on in the stock market. So as we know, I did alert Meta Facebook on yesterday at $96. Told you guys it was breaking out. It opened up above $100 today, sitting at $103.54, up over 7.8% on today alone, guys. As you know, Mark had announced that he will be cutting jobs for Facebook, over 11,000 jobs, guys. And we know it's a lot of big large cap companies, big tech companies that's doing this same thing, cutting off a large portion of their staff, being for the fact that, with these social media companies, advertisers aren't spending what they were spending before. With these other companies like Walmart, they got abundance of inventory. People is not consuming and buying like they was before because, of course, we was in a recession. And as we know, this is what happens in a recession. People start to get laid off their jobs. The government, the media try and act like we're not in a recession or it's coming. Whole time we sitting in right in the middle of it. I don't know. Make it make sense. But anyways, guys, let's go ahead and continue further look at what's going on. And 11,000 jobs is insane, guys. But anyways, that was a solid play. If you got up in on that, I would be, getting out of Meta at these prices. Even though from here, after breaking $100, it could fly straight back up to around $120, $130. But being for the fact of how volatile and how choppy the market is, I feel as if it will come back down, test support at 100, and possibly could break through and then shoot back up. So it's so choppy, a lot of volatility. That's why I tell you guys, cash is one of the major positions. That's what the millionaires, the billionaires, institutions, that's what they doing. Whenever the market is going to a state like we recently seen this year, people pull out their money, sit on the sidelines when crazy opportunities come about, 30-40% drop, or first green egg or some whatever strategy they use, they'll then attack that play or whatnot and get in, get out, either with a small loss or a massive gain. So anyways, let's go ahead and take a further look, guys. So also, we alerted Carvana. As we know, Carvana fundamentals are poor, guys. Even though it's poor, I'm still taking advantage of the price action. As we know, Carvana had came down to $6.50 the other day and shot right back up to $7.50. That's a dollar and about a dollar. That was a dollar move in between, and that's exactly how you take advantage of the meter move. I'm not looking for it to go back up $10, $20. I just want that 50 cents to a dollar move, and that's enough because in options that's going to be 50, 60, 70%, sometimes 100%. And day trading it, if you put in buy enough quantity of the shares, you'll have enough. You'll easily be able to make 10%. Like I put in 7,000, made 10%, 700. In and out. And I was willing to lose, $150 on that play in order to make 700. So, that's my system. That's my setup, guys. Very high risk, very risky play, guys. So another play we got on the radar is Lyft. As we know, the competitor to that is Uber. Uber is holding up very, very well in the 20s, while Lyft is trading at half of that price, guys. And as I do see the value in Lyft, far as the short term in and out type of play. I do see it, shooting back up easily to around $12, $13 range. So I definitely be keeping that on my radar, guys. Looking to get in and out of the lift as well. And Upstart was hammered yesterday in the after hours, guys, coming all the way down to that $14 range, and after hours dropping over 20%. That's just an insane move after already being down over 70% on the year. So you guys already know what to do. Add your boy on Instagram at the B Hayes Show. I love y'all. Get in VIP, and we